Hey everyone, Couch Investor back on our earnings video for today. So Datadog reported a pretty strong report. The stock is up pre-market around 20% or so. Of course, other companies also reported earnings such as Uber, Celsius, another strong quarter. Uber, good print, stock is I believe flat-ish at the time of making this video. If you want me to cover the two other companies, let me know down in the comments below. But Datadog, huge beat, strong guidance as well. So if you don't know Datadog, in the past, it has been doing quite well. It's in an industry that keeps on growing. Remember, 90% of IT spend is still being done on-prem. And if you remember, this is what Andy Jassy said during the Amazon's earnings call. Even if you look during optimization times in the difficult economy, customers have really noticed how AWS leaned in with them for the long term. And I think that matters to customers. And then we have, of course, this is about Amazon, not about Datadog, but so just you get the picture. And then we have a $92 billion revenue run rate business where 90% of the global IT spend still resides on premises. And if you believe, like we do, that equation is going to flip, there's a lot more there for us. Of course, the same could be said for Datadog. If you believe, like the guys of Amazon, if you believe that that spending will come to the cloud applications, then yes, Datadog will be a beneficiary of that move. So over the last couple of years, you can see revenue has continued to go up, free cash flow positive already for a while and increasing in the last couple of quarters. Return on equity is still negative in the last 12 months. That is gross profit margin still around 80%. Then return on capital is still negative 3.3%. By the way, market cap $25.85 billion, forward PE of 56.2 times. Stock is now closer to $97. So of course that market cap will increase by 21%. And so if you want to look at the valuation metrics, of course, these will get updated when the market will open, but you get a bit of the sense of how cheap or how expensive the stock actually is. Because yes, when you look at forward PE, 56.2 times, you might say, oh, this is pretty expensive. If you look at its actually 4-year mean, the mean was at around 173 times. So yes, it has been previously trading at a much more lucrative premium valuation, and it goes the same for EV to EBITDA, price to sales, price to free cash flow. We are now at a, let's say, more reasonable levels. Some might say still pretty expensive. And so if we jump into the earnings report, first a couple of comments here from the CEO. So we are pleased with the execution in the third quarter with 25% year-over-year revenue growth, which also, by the way, beat the guide by 4.7% and the revenue estimates by 4.4%. EBIT also beat by 30.2% and beat the guide by 30.8%. As for the EPS estimate, that beat the guide by 11 cents. He continued by saying that companies across all industries and sizes are building cloud applications and services to deliver positive business outcomes, including more users, higher revenue growth, improved productivity, and cost savings. With our unified cloud-native end-to-end observability and security platform, Datadog is uniquely positioned to help our customers reach their goals. And like I said at the start, 90% of global IT spend is still on-prem. If you think most of that will go to the cloud, then again, Datadog, you will see that uptrend continue quite significantly. Now, before we continue, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's continue here. And by the way, if you look at those numbers, you can clearly see that suddenly some companies are starting to spend a bit more on what they've been holding up maybe in 2022 or beginning of 2023. So revenue increased 25% to $547.5 million, GAAP operating loss of $4.2 million with an operating margin negative 1%, non-GAAP operating income of $130.8 million with a non-GAAP operating margin of 24%. Which then leads us to GAAP net income per diluted share of 6 cents, non-GAAP 45 cents. Operating cash flow was $152.8 million with free cash flow of $138.2 million, and they beat the free cash flow estimate by around 67%. Pretty huge beats across the board. Now they tell us here that as of September 30th, 2023, they had around 3,130 customers with ARR of $100,000 or more. That's an increase of 20% from about 2,600 in the same period last year. And that's a 41% growth on a 3-year CAGR, by the way. Then as for the fourth quarter and full year outlooks, for the fourth quarter, they expect revenue between $464 to $468 million. That was also a 4% beat versus the estimates. Non-GAAP operating income between $129 million and $133 million. Non-GAAP net income per share between 42 to 44 cents, assuming approximately the 355 million weighted average diluted shares outstanding. Then as for the full year, they expect revenue to come in between $2.103 to $2.107 billion with a non-GAAP operating income between $453 million to $457 million. And then the income per diluted share, non-GAAP, $1.52 to $1.54. And now with regards to total operating expenses, how much did that grow? Well, that grew close to 20% year over year, while revenue increased faster than expenses. It's usually what you want to see. Net income still a loss, but improving year over year. Now I do want to show you a couple of extra things. This was from the investors presentation back in August. So yes, a couple of months ago, but I think of course this still applies today. So they believe that long-term growth drivers are still in early stages. When you look at Datadog observability, total addressable market in 2026, they expect it to be $62 billion. And this is what I meant with the IT spend. So by 2026, they say that the cloud spend as a percentage of global IT spend will reach approximately 20%, which is around $8 trillion. And for those that needed a small reminder, basically they started off in 2010 with just a real-time unified data platform, and now in 2023, well, they offer so much more. And so if we look at the graph right now, yes, the support line here at around $80 or so is currently being well respected, but just because of a great earnings report. Now we're getting closer to that previous resistance point, which you guessed it is another round number, is the $100 mark, which we've got rejected quite a couple of times already in the past, actually this year. So remains to be seen what happens there, but I expect a huge green candle here for this earnings report, which is a big contrast from the one we've gotten last quarter, which was a big red one. And so to conclude, pretty strong quarter by Datadog, good guidance as well. They are in a good industry, a growing one as we've seen, and they'll just continue to grow if their execution remains this good. This also gives us a good indication as to how healthy these types of companies are in this macro environment. So far, so good. Of course, do share your thoughts down in the comments below if you enjoy this type of videos. Leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.